Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited, and here is your daily technical analysis of foreign exchange markets. We'll start with the euro dollar. Okay, down to 118.08 yesterday, 3 ticks away from reaching target X. This is the target for the action over 2021 so far, being a sort of halfway hesitation. Anyway, it was the second bearish black crow and a suitable follow-on low to the previous session's immediate countering bearish engulfing pattern. It was also the second consecutive close below the long moving average, currently at 118.71, the seemingly lightweight, lesser Fibonacci congestion level at 118.97 and also at 118.87, the significant June 2018 high at 118.51, and finally the middle time of the 2021 bearish Andrews pitchfall, currently 118.61. There may be some consolidation now around this area. However, as I've already mentioned, there is this idea that the last 3-4 weeks have been a possible bear flag in formation. Enough that I've provisionally listed targets X1 at 117.05 and X2 at 116.15 as an initial and final target for such a move. It is time now to see what supports are below. We have the significant congestion from August-November last year. We're in it now. And a significant amount stretches all the way down to the 50% Fibonacci line at 117.58 from the big June 2020 to January 2021 move. So far today, a dip lower, enough that target X at 118.05 has been achieved, but not that much more. Cable, aka sterling against the US dollar. A second bearish black crow and a suitable follow-on to the previous session's bearish black Maribosa. It's also the second consecutive close below the combination of the rising short stroke medium moving average, currently at 138.12, and its partner, the start of November 2020 today uptrend, currently at 138.19. The market started to work its way down through the previously highlighted congestion of 137.5 to 136.5 area, dating from the turn of January into February. However, the next significant support would be the rising medium moving average, currently at 136.27. Below that we have the supremely important lower time, currently at 135.69 of the late June, late September 2020 bullish shift pitchfall. Now this lower time, along with the middle time above, currently at 140.28, have given the bullish angle of attack of this market, well, since September last year. So far today, a limited attempt lower, tentatively approaching the interesting 61.8% Fibonacci line of the whole of the 2016 move at 136.54, but then a pullback up so far. Euro sterling. All still a little tense here now. A fourth bullish white soldier yesterday and a second close up and outside the descending triangle, closing over the downtrend at 85.89. Though not really breaking higher into new ground. This break upwards is still not verified to my mind. We still have the original 3 targets below, target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, target X1 in the 84.75 area, the target for the recent sideways triangle, and finally a possible target X3 in the 84.5 area for the recent descending triangle pattern. We also now have target X4 above. That's the target for a possible break upwards of the descending triangle. That is in the 87.15 area. So far today, a further consolidation within yesterday's levels. Initially it seemed the market was basing on an old congestion, the 86.17 area. However, we're now moving back down towards the old broken downtrend, and it's raising ideas about a false break higher above this downtrend. So caution. Overhead we have the April 2020 low at 86.69, but really then nothing until the target X4 area. US dollar against the Indian rupee. A second bullish white soldier yesterday, but really it was a higher yet still indecisive spinning top. I suppose in part you could call it a follow-on to the previous session's combination of a key reversal up and bullish engulfing pattern, and a bullish closing white Maribosa as well. The top side was limited by the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64 and the middle time, currently 72.69 of the October 2020 to February 2021 bearish Andrews pitchfork. The former only on a closing basis. Significantly, it was a second consecutive close over the downtrend, currently at 72.27 of the original descending triangle. That seems to have morphed into a falling wedge pattern. Now we have a preliminary topside target X2 for the falling wedge pattern now in the 72.60 area. This would only be good if the break higher is not a false break. So far today, a limited try higher over the 50% Fibonacci line and the middle tine, but struggling to stay up there. Seems the middle tine is providing significant resistance. Beyond that tine, we have the declining short medium moving average that's currently at 72.86. US dollar against the Brazilian real. An easing of the built up tension here with a second large bullish white soldier yesterday. That's based on the combination of the interesting lesser 38.2% Fibonacci line at 552.90 and the broken but still influential mid-January to date uptrend currently at 551.72. Both these form the trend lines of the recent ascending triangle pattern. These bullish actions also offset to a degree what had started to suspiciously look like a recent bear flag pattern. Is looking less so now. Overhead we have the very recent 50% Fibonacci line now at 566.34. US dollar against the Mexican peso. A second bullish white soldier yesterday and a follow-on to the previous session's key reversal up. You can see from the limited move higher made yesterday that the market is treading wary as it approached the overhead nearby shallowly declining long moving average currently at 21.0458. So far today, further hesitation again in front of the long moving average. This time it is exhibited by rolling either side of the congestion at 20-20-40. Not the sort of thing you'd like to see if you were a bull out there. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.